The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the April 9th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let me share with you some empowering thoughts for your Tuesday. You know, positive influence can have an incredible effect on your life, but so can negative influence. Both will take you somewhere, but only one will take you in the direction you truly wish to go. You know, if you're full of ideas, pour them out. I mean, pour them out all over the place. As you do, I promise more will be poured back into you. And if you want to touch somebody, well, first you must be touched. The only way you can touch someone, folks, is to be touched. And if you want to touch somebody, express sincerity from the heart. When you try to impress, all you do is build a gulf, whereas by expressing yourself, you build a bridge. So let's go check out the bridges in this marketplace. Right now, we've got the Dow up about 6 points, S&P up 48 cents, Composite up $1, Russell down $1. Very quiet market out here. You've got Google's up $4, $5 right now, Apple down 2.5. Google's leading the charge to the upside. Netflix up about $4, Regeneron Pharmaceuticals up $3.50, BlackRock up $2.83, CF Holdings up $1.81, Royal Gold RGLD up $1.69, Wabco Holdings WBC up $1.51. MasterCard leading the charge to the downside, off $5.77, a little over 1% out there. Shulman Inc. off 10%, that's off $3. Diego PLC DEO off $2.85. Charter Financial Corp down $2.34. Salesforce Innovation, or Salesforce.com, CRM is a ticker symbol. They're off about a couple of bucks. Apple down a few. You've got Essex Properties, ESS, off about 1% as well. FTI Consulting, FCN, off 5%. That's off $1.80. Our call-in number is 877-927-6648. Give us a call, folks. We'd love to hear from you. We can take a look at your stock chart. If you are listening on your mobile device or the radio, maybe you're just listening in at tfnn.mob. I remember you can always catch the live stream of this show by going to the homepage of tfnn.com. Over on the right-hand side, you'll see a little button with 3 smartphones. Click on that. This show will stream live to you, and the archive is on Channel 10. So as we do here, as we start off the 10 o'clock show, we take a look at the indexes. So let's take a tour around the indexes. First, we're looking at the S&P 500. Now, the S&P 500 is trading up above a resistance area, now becoming support. We'll see if it becomes support. That is being set up by this little bearish engulfing candle here from March 21st out there. That says that the prior day is really the day to be used as your support or resistance line. That high is 1561.56, traded at 1563.30. Closed above it last night. What does that say? It says, you know, for goodness sakes out here. Come on, all you S&Pers. Let's push this thing up to 1576.09. Let's get that test done with. No, test could be done with, and you can get it close above it. And then what do? Well, we'll cross that bridge when we get there. Right now, we're just looking for a test. It was, so close just about a week ago on April the 2nd when it got up to a high of 1573.66 out there. My goodness, less than 3 points away from being able to test it, and it couldn't do it. I suspect it I know it wants to get up there. The question is it going to test it anytime soon? Well, in the S&P, come on. We got the bulls came out in force on Friday, even after Jobs Friday, even after disappointing numbers out there. The bulls still able to get above 1546.72 and able to do it with a hammer candle. Yesterday, the bulls were still around, so they didn't take the weekend off. They didn't say my workload is done. They came back just to fortify their hammer position by creating a bullish engulfing candle yesterday. That says to me, okay, it's going to go ahead and it's going to attack that 1576.09 level. It's going to happen. Of course, I can't make it happen, but it looks to me like it's going to happen. Whether that's today or tomorrow, we are coming into a new moon tomorrow, so maybe it's going to be tomorrow, but I've kind of put the new moons and full moons off to the side because they really haven't been that great of a magnet, or certainly nothing that is long-lasting out there. So that is on the S&P 500. Let's go take a look here. Let's look at the Russell 2000. So let me put that stock chart out here on the screen. Let's go hunting for bulls and bears out there. Isn't that a fun thing to do? Now, the Russell 2000 index is a little bit different than the futures contract, and certainly different than the IWM. Here in the index, not really giving you any kind of bullish patterns. In fact, if anything right now, the potential more so for a follow through to the downside. I say that because if you were listening in on the first show here, what we can see is price really still trading inside this candle, the body of the candle from April 3rd as it made its move down here. So until the Russell 2000 can break above 935.39, I don't mean break, I mean close above 935.39, it's not really impressing me. It almost looks more like if the S&P can make its push to the swing point high, we might be all that we see here is 936.70-ish on the Russell 2000. Now, that wouldn't be a bad thing because if you get a failure up at the S&P 500 and you only get a .618 retracement on the Russell 2000, where would you go short? Yeah, good answer out there. That's right. You'd be looking at the Russell 2000. Of course, you'd want to make sure that you were paying attention to the futures contract out here because we know, and I'll go ahead and pull that up on the screen here, on the Russell 2000, you did have the bulls truly out in play here on Friday, having a nice hammer candle. I mean, that hammer candle, that is strong. That is a strong reversal, no question about it, and then a nice bullish engulfing follow-through here. You can see support also on the Russell 2000 set up by this bearish engulfing candle on the 20th of February out there. That high, 933.20. That area, which is also the .618 level, is acting as a resistance zone. Let's go back to our indexes here. Actually, let me just switch over to the ETF. So let's do that. Let's take a look at the IWM. Then we will have finished off the small caps totally. And then actually we're going to switch over to the Qs as long as we're in the ETFs here. So bouncing around just a little bit, but why not? Why not? You know, I don't mind structure. But if we do take a look at the IWM, you don't see any reversals out here in the IWM. Now, you know, the ETFs, they are very, very, did I say very? They're very important to be paying attention to because in the ETF structure, you've got all the adjustments for fees, most certainly, but you've got your adjustments for dividends, and so it is very important to be paying attention to the different patterns inside the ETF structures out here. Now, no reversal candles whatsoever inside the IWM, so that's different than the futures contract and different than, no, not different than the index itself. The IWM here yesterday bouncing up, doing it with 28 million shares after coming down with 65 million shares on April 3rd, so that's not a lot of conviction behind that move. And it looks to me like the IWM right around 93.23. That's a 618 level. Maybe it's 93.99. That and perhaps it can move up to before you start to get into your next sell range for the small caps. Now, what I'm going to do, I pointed this out to my clients this morning, and I'm going to point it out to you as well. And I'm going to have some of you go back and do some investigative work because maybe you can find something out. It was something as I was updating my charts yesterday. I had to, have you ever just taken your, you looked at a chart or you looked at something on the screen and you said, "Did my eyes failing me here?" And maybe you kind of, like I do every now and then, I just kind of click the side of the monitor thinking that that's going to do something, that's going to change anything. I hit the refresh screen and so forth. And what I was doing yesterday as I was updating my charts out here and as I was tapping my monitor, it was because of yesterday's low volume inside the Qs. Did you notice that out there as well, too? Did you take a look at the low volume in the Qs yesterday? What's up with that? Now, not just low volume. Sometimes we talk about, well, not sometimes, oftentimes we talk about volume around here. But how many of you out there took a look at the Qs and said, that's something to think about? 17.8 million shares on the way up yesterday after a real big down day, 55 million shares on Friday. But the thing about yesterday's volume here, and I'm going to do this, I'm going to try to do this. I'm going to take, I've got the little volume line tool, as you know, if you watch on Tiger TV. I'm going to draw this line across the screen. The problem is that I don't know if I can get how much darker I can actually get so that anybody can really see it on my screen. Don't pay attention on my screen. Go find it on your screen as well. Now go back and see when we've ever had a day where you've had volume like we did on Friday. Not the exact same volume. I'm talking about big volume, 55.6 in this case, and then the following trading session with a move up, and you do it on basically, I think it's 68% lighter volume, 60-something% lighter volume, 17.8 million shares. Now, here's the key. You can't do it on a holiday. So don't go back and say, hey, this happened on November 26th or what have you. Well, it's Thanksgiving, or it happened on December 24th when you had, half of a trading session. Go back and actually take a look and see if you can find another setup like that, because I know it's got meaning. I just didn't have enough time to go back and try to find out, well, what meaning does that? Now, I found one instance, but one instance doesn't, make a trading plan at all. But it is the most interesting thing that I saw inside the stock charts yesterday was the lack of volume inside not just lack of volume, but the change. It was not the same thing inside the S&P 500, the SPYs. It was not. Now, was there lighter volume in the SPY? Oh, most certainly there was. Take a look at the SPYs here. The SPYs yesterday doing volume of 86 million versus the downdraft of 159. Most certainly. So you had you had lighter volume, but still not the same type of difference in volume as you saw inside the Qs out there. If we take a look at the diamonds out here, and now I'm just looking at volume. We're just taking a look at volume patterns out here. You had 3.9 million shares yesterday versus the downdraft of 7.3. So yeah, lighter volume for sure. But very interesting. At least I noticed it in the Qs out there. And I think if you go back, like I say, haven't had the total time in order to be able to do that, to go back and totally take a look at what the other chart. Now, there was one chart pattern that I did find. And that chart parting, we'll see how that plays out as well. We'll see if that is consistent. Hey, let's go out to Costa Rica to our man, K. Rico. K. Rico, thanks for calling. Thanks for holding. How are you today?
Hey, Steve. I just got to tell you, you do a great job, like a racetrack announcer, calling the races, the horses running around the track. You have a smooth way of putting everything. I'm always glad to be able to be in my place to watch your opening round of ideas, what's taking place, and it's so smooth. I really just called to tell you that, and there's lots of guys listening out there. They might not call in, but I just want to tell you thank you.
Well, thank you very much. Nicest compliment. That'll keep me all revved. That'll keep my engine revved up all day today. And so I appreciate that very much, K. Rico. Thank you.
Sincerely. And I'd like to shoot you an email. Is it the email address on the
Yes, at TFNN. Steve at TFNN.com. Absolutely.
Okay. And I'll put the subject K. Rico so you know it's me.
That's absolutely okay. That's beautiful. I'm happy to do that. So you want to take a look at BX. Tell me what BX is.
Blackstone.
Oh, Blackstone. Okay. BX. So we're going to take a look at Blackstone with K. Rico, which is a beautiful thing, folks. We go all the way out. We're talking tropical here. We go to Costa Rica. Is it Costa Rica or Costa Rica?
Costa Rica.
Costa Rica. So we're going back to Costa Rica with K. Rico as soon as we get back. Right now we've got the Dow is flat, S&P is flat, Composite is flat. Let's go water skiing, folks. Let's go barefoot water skiing because that's what the markets are doing. Totally flat out here. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow is up about 10 points right now. Composite up 4. S&P's up a point. We're going back out to Costa Rica with K Rico to visit with K Rico. We're taking a look at BlackRock. BX is the ticker symbol. And are you long, short? What are you doing?
I'm looking to help a friend on an entry area. I really am looking at like 1775, 18-ish to get in it. Sit on it, collect a dividend, maybe do a covered call here and there. And I've been watching the stock since last July when another fellow named Steve on CNBC was talking about it, and I started looking at it, and I said, he's got a good idea here, but I never pulled the trigger myself because I'm a day trader because I'm in and out.
Yes.
But at the point of these other people that ask for my ideas, I really am asking you for your ideas.
So, I've got the weekly chart up on the screen here. Now, the cool thing about the weekly chart is if you take a look at the swing point from April 29th, that high was 1963 and did 20 million shares out there. And what happened just about 4 or 5 weeks ago, the week of March 15th, I got up over that swing point with volume. So it gets up over it with 35 million shares, came back and tested it the following week with lighter volume, 24 million shares, going against 20 million shares, but really going against the breakout session, comes back and tests with 14 million shares on March 29th, even nicer. Now, you got just a slight close below that last week. with light volume, though, 21 million shares on the weekly chart. So this actually has a confirmed A to B equals CD up on the weekly into 2660. So the weekly chart looks real nice. Boy, this equity here, what I would say is if this ever comes back into the 30 level of that relative strength, relative weakness indicator, you probably want to be all over it, because each time that it's gotten down into that level, you got to give it a little bit of a wide stop. It has pretty much stopped dead in its tracks out here. So, I don't know that that's where, you're going to have to be really patient on a weekly chart in order for that to happen again. But it would be a place where you would certainly want to take a look at being certainly long this. On the daily chart, so on the weekly you have a confirmed A to B equals CD up. So that's nice. On the daily chart out here, the daily chart, shows it already pulled back to about the midpoint of that relative weakness area and did that last week. Gave you a nice little piercing candle. That was a little bullish reversal candle, and it did that on April the 4th. Now, you're saying 17, so, where this thing last broke out was at that 1677 high, so I imagine it's the January 2nd area that you're taking a look at. And if the market were to pull back there, what I have to do is actually, why don't I put the S&P over this? Let's see if I can how quickly I can do this. So let's take a look at an overlay of the S&P 500 here. So SPX, because maybe we can see if this is really just trading with the market. So I'm going to go ahead and put this in the chart itself and hit OK, and there we go. So, we can see here, K. Rico, is if we pay attention to the S&P 500, this most certainly is trading along with it. So you might be able to go ahead and make your trading decision based upon your thought process of what might happen in the general marketplace, which would be what? What are you looking at? What are you looking at in the general marketplace?
I agree because it's not a bad thing to have a little pullback or a nice pullback of good percentage. So there's backfill. So there's some real validity to this stock market, not just being a Fed POMO pump up.
Yes. So I would say that because this clearly the overlay on this chart is the S&P 500. You can see it just follows it along. And so then in that case there, the area that you're looking at, which is in the 17 range, of January 2nd level, December 31st, that would be a nice buy. But you do have a confirmed A to B equals CD on the weekly chart up here. So it does look pretty good, and I don't see any kind of volume really off of the highs or anything out here. And even where the price is at right now, 2026, you've got pretty decent support at 1895 down to a low of 1706. So I think the areas you already have identified, those are the right areas to be paying attention to.
Okay, good. All right. I talked to my friend. I'll give him this advice, and we'll see. I'm looking at it for myself. It's something to put away for.
Yeah,
I don't know.
It does look good. It does look good. It does look good for sure. K. Rico, thanks so much for the kind compliment. I really do appreciate it. You made my day, and that's a beautiful thing.
Oh, thank you. My pleasure.
All righty. Have a great one. We're going to go out to Dick in Paramus, New Jersey. When we get back in about 3 or 4 minutes, we're going to take a look at Facebook. FB is the ticker symbol. Right now, the Dow's up 22, S&P is up 2.5, Composite up 7, small caps getting a little bit of a charge here. They've actually turned green, up 74 cents. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show. Folks, stay tuned. Basil Chapman, he'll be up next. And as we do on Tuesdays, it's Options Hour from 12 to 1. Daryl Martin, 1 to 2. David White, 2 to 3. The Tom O'Brien Show from 4 to 6. And let's go out to Paramus, New Jersey, to our man, Dick. Dick, thanks for calling. Thanks for holding. How are you today?
Good. What do you make of that candle today on Facebook? It's coming into last Thursday's price range with a lot less volume. Is this bullish or bearish? And
well, you know, I like the Facebook stock chart itself. What I like about it is, number one, if we take a look here, folks, if you take a look at November the 26th, as we came back from Thanksgiving, you had a little gap away with volume, 123 million shares. And then as it came back and it tested that area back in December, now albeit during the holiday, still did it with 56 million shares. So very light there, and then it goes ahead and it makes a nice move. And it came back and it tested it back here in March March 27th specifically, created this little morning star reversal pattern area right here where you found some levels of support. So yesterday was a bear sash candle. So the fight right now between the bulls and the bears are going to be at the lows of 20.
RSI.
RSI is just in the middle. Yeah, no, it's in the middle, so it's not giving you any kind of real information. But if you're looking, are you looking at this to go long?
Yeah, I'm looking to go long because it looks like it's kicking back at the last 30. You know, their big Google, the big phones coming out Friday, and so it could have one more bang. Last Thursday announced it. If you look at the big, there was a lot of volume around 1, 2 o'clock there.
Here's the thing: if you wanted to go long, you can start building a position. You could build a position, and your stop, your first entry, you would let's say you're going to scale in. You can scale in now and take a, what's that?
What's the volume? When the volume's light, is that the sellers are drying up, or they're just waiting to dump it again? That's what I mean.
Well, you've got 8.2 million shares, an hour worth of trading. That could be about 48, 50 million shares. So volume isn't what I would call extremely light. It's heavier than yesterday. Yesterday was 27 million shares on the way back, and you're coming into this candle right here from March 27th. So volume-wise, so far, I wouldn't call it an extremely light day.
Wasn't that a key reversal day? According to, I go to stockcharts.com, they call that a reversal, high pole reversal day.
Yeah, absolutely. It was a key reversal day. It was a Morningstar reversal pattern as well, three-candle session.
We got a hammer candle. Is that bullish or bearish, that kind of hammer? It looks like it's bearish for like 3 or 4 days out, and then it kicks up.
No hammer. The only hammer candle that is on this stock chart.
It opened lower and it's higher right now. It's a red hammer. If you go to stockcharts.com.
Yeah, you know what? I can't tell you what's behind their methodology for identifying hammers, but the only hammer on this chart here is February 26th. That's the only hammer candle on the daily chart that is out here. And once it broke below that, it went right to where it should have, which was to the support areas of the breakout from November 26th. I'm just saying, if you want to take a entry into this equity, make sure you've got a stop with a close below 24. I would say a close below 24.68 out there. But I like it's either making an A to B equals CD up or an A to B equals CD down. I think it's going to be an A to B equals CD up.
When are we going to find out? When the earnings come out, probably it'll form that pattern.
You know, when do earnings come out on Facebook? Do you know?
May 1st.
May 1st. Okay. Yeah, I think it's a good little trade setup. My preference would be to wait to see if it'll pull back and test this area once more, March 27th. Wait until it either rejects the high, 26.28, or if it can close inside there, look to be all over this right around 24.72.
What's the PE on this stock? This is just a gambler stock. You know what I mean?
I don't have the tool up on my one of my other screens here to tell you right now quickly to switch over and tell you what the PE is. Gambler stock. No, I think that Facebook, they had a pretty poor opening. I don't think Facebook is going away anytime soon. And technically, I just trade the technical patterns out here. It does not look bad at all.
Okay.
Alrighty.
See you later, Bernanke. Take care.
All righty. Thanks for calling. Let's go take a look here, folks, at we haven't looked at the currency market. We did gold, we did silver. Let's go over and we'll take a look at light sweet crude bonds. Then we'll go take a look at currencies out here. So over at light sweet crude right now, we've got this is trading out at 93.30. I guess we did light sweet crude because we saw that little bullish engulfing yesterday, and it was giving that back. So we talked about maybe taking a look at an entry here at the bottom of the rising price channel. So we did look at that, but we didn't look at bonds. Now bonds here, we're pulling back early on, not so much right now. Now the ideal trade on bonds, this is kind of how, in my mind at least, things were set up. We'd see the S&P get up into the test its October 7th high, and that would actually drive bonds back to test the old resistance level. That old resistance level is at January 2nd high of 144.29. It'll be a heck of a move back there, so I don't know if it'll make it all the way back there. But if bonds do come back and test 144.29, reject that area, then what you'd want to do is you'd want to be all over bonds. I do not believe the move to the upside here is complete, although it is a pretty good move. You're taking a look at two yellow boxes. Those represent, quite frankly, they represent the consolidation range that bonds have been traveling in from January the 2nd until we saw the breakout last week on April 3rd out there. But it says that bonds still have a higher price to move to in that 149 range. So it's backing off. Maybe it's really setting up a B to a C of an A to B equals CD up. So that's my take right now on bonds. Let's go take a look at the currencies in the marketplace. Let's start off. Let's see what pops up on the screen here. There we go. We've got the euro. So we take a look at the euro trading out at the 1.3033 level. Looks like what the euro wants to do is bounce up to 131.13. That would be nothing more than a 0.382 retracement. That would take you right into the old resistance level out there. So it did break the first resistance level. That was this support range from the swing point from December the 7th. That low was 128.75. Broke through that. Also broke through the resistance level established by March 6th low at 129.626. So maybe the third time is the charm out here inside the euro. But looks like the euro does want some higher prices. That ought to give a little bit of energy to the S&P and let it go do its work. Out here yesterday, happened to be, had Larry's show on in the background. He was talking about a three-drive to a top, a potential three-drive to a top in the U.S. dollar, Japanese yen currency pair. I've been paying attention to it, but didn't catch that pattern. Actually backed it off a bit. He was using a different candle and found an actually better-looking three-drive to a top pattern that was out here, and that was starting with the candle session right here from the trading day of February 11th. So that's going to be my first drive to the high. That was $94.44 out there. So that is drive one. Drive two took place right here on March the 12th, out at the price point of $96.70. Now, along my chart here, along the bottom of the chart, is a little tool that just simply measures time. And in a measurement of time, tomorrow, April 10th, would be the exact time zone difference, time period difference, trading day difference between the drive one, drive two, and then to take you to drive three out there. Now, the pattern completed, price-wise, it completed earlier this morning. And the blue lines, the horizontal lines going across my screen, those really representing primary trading ranges. So you got a three drive to a top pattern completing also inside that primary trading range. Now, no bearish candle here just yet inside the U.S. dollar, Japanese yen, but it may be, and I'm not suggesting that you look at the power behind this move here. Wait for a total bearish reversal candle if you were going to try to take the other side of this trade here. I'm just really looking at this. I'm not going to take the other side of the trade. I don't think I am. And instead what I'm looking for is to see a retracement begin and then be able to get all over another long trade here inside the U.S. dollar, Japanese yen currency pair, because that is one heck of an A to B move coming all the way down from the 77 level all the way up in essence to 99. So that's a big move. And we'll see if this three-drive pattern here, whether the Bank of Japan is bigger than the three-drive pattern. Let's go to Beverly in Skillman, New Jersey. Beverly, thanks for calling. Thanks for holding. How are you today?
Really good, Steve. It looks like you're drawing aqueducts with your time frame.
Aqueducts. Oh, well, thank you.
Well, those are the things that carried water into Rome. You know, they always had arches.
Yes.
Yeah. Anyhow, we had I've told you before, we have a consignment shop.
Yes.
And occasionally stuff comes in that we just don't have customers for, mainly because it's so expensive. And are you familiar with George Jensen silver?
I'm not. I apologize.
Okay.
Tell me about it. Tell me about it, though. Tell us about it.
It's like Tiffany. It's like a Jaguar. It is like top-of-the-line silver. And we got some items in, some enameled sterling items in. And so what we do occasionally is we take things to an auction where they can get much more money for it.
Yes.
So we drove it over there, and there's a lady who handles it. We've never seen this happen before. And she said basically, I'd be happy to look at it, but her auction that she just does jewelry, gold, silver, that kind of stuff, was full up for the next 6 months.
Really?
Yeah.
Wow.
And so we said, why? And she said, apparently people need money. But, 6 months, that is incredible. And this is top stuff. You'd think she just kind of moved some of this other stuff over just to get some Tiffany or George Jensen silver in, but she didn't.
Well, wouldn't a better place maybe to, what can you sell it on the Internet? Wouldn't that be a better spot?
Well, we could, but, we're talking $2,000 to $3,000 here. I guess we could try.
Yeah.
But when we when we take it to an auction, the one we go to, he has international buyers from all over the world, buying. And George Jensen is really, really well known in Europe.
I see. Okay.
That just astounded me. I've never seen this happen before. So apparently, this economy is not as good as people are saying. Usually, jewelry is the last thing women part with.
Yes.
Like getting their hair done. They will always keep getting their hair done. But anyway, just an observation. So I found it absolutely weird.
Well, inside the den, our man Basil Chapman, he's saying there's a great Jensen store in Soho, Manhattan. Maybe give them a call.
Oh, okay. In Soho,
maybe they'd have interest in buying that stuff from you. So that's a nice idea there. But I'm not that familiar. I've never been other than collecting some silver coins. I've never been real big into silver from a jewelry standpoint. I'm not a real big jewelry person. I'm kind of like most guys out there.
When people send in their silver to sell,
yes,
you look on the bottom of it and see if it says G.J. or George Jensen, and pull it out.
I'm always surprised because when people, when you take a look at what you can actually liquidate a piece of jewelry for, silver-wise, versus keeping something that's beautiful. You just don't. Typically, a piece of jewelry is not going to weigh ounces and ounces. So I'm always a little bit more amazed now. But anyway, that's just my own take. But I'm not a big.
Typically, Tiffany sells for 20 times weight.
Yes.
So if you get some of that,
it's not because of the silver; it's because of the blue box.
Yeah. It's because of the name on the back of the blue box.
That's right. Absolutely. Well, that's great.
Hey,
try the internet.
What is the name of the store from Basil?
It just said it's called the Jensen store, so I think it just.
I can find it.
I think you should be able to find it. But check out maybe try the internet. I love the internet. There we go. We got George Jensen now. We got our man in the booth there giving us the George Jensen song out there. So give that a shot. All right, Beverly.
Okay, thank you.
You bet. Take care.
Bye-bye.
Folks, I do love the internet out there. And I don't know how it's impacted your life. My daughter was in a automobile accident 3 weeks ago, and she was rear-ended while on the expressway. So pretty scary experience for her. She wasn't at a dead stop. She was slowing down on her way back up to school. She was slowing down. It was rainy. So it was raining on the expressway. She was slowing down because the car in front of her was slowing down, and somebody from behind, some gal from behind, some girl from behind, probably was texting, wasn't paying attention, and slammed right into her, full speed, no brakes, pushed her into the car in front of her, totaled her vehicle. She was fine. So she was in good shape, just shaken up. That was her first automobile accident experience. She actually saw it coming, so that was a good thing. So she did look in her rearview mirror. She did see it coming. She had thought about actually swerving off the road. She's a quick thinker, thank goodness, because driving up towards Tallahassee along I-10, the shoulders is not like pulling off into the shoulder. It's like pulling off into, she would have rolled because it's pulling off into a rather large ditch out there. So I'm glad she didn't do that, probably driving 55 miles an hour, 50, 60, whatever speed she was probably going out there. But finally, it took me 3 weeks to get her car replaced. But most of that was going through the rigmarole of the insurance company. It was the third-party insurer, not my insurance company out there. So that is a story unto itself. I'm not going to tell that here right now, but thank goodness for the Internet. I found her a nice replacement car, had a guy from Pensacola meet me, drive it over to Tallahassee on Saturday, and it would have only because the Internet was able to find the exact color that she wanted, a better year than what she wanted, and at the right price out there. So I love that Internet. 877-927-6648. Markets are relatively flat, so got the Dow is up 4, S&P is up 61 cents. Maybe Basil will be able to get this market moving so the S&P can get up to its high. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Again, really flat markets out here. Dow's down 2, Composite is up 1, S&P is off 47 cents. So I will tell you this part of the story. I was mentioning my daughter, the automobile accident that she was in. Thank goodness, she was okay, very much okay. Had her checked out. She may be a little bit of whiplash, so chiropractor just kind of working out the kinks there. But, if you know somebody, if you're ever in an accident, God forbid, or you know somebody, and they're dealing with the insurance company. So, with the insurance company is going to do, at least in the state of Florida, when they total a car here, it's really you against an army the laws are really set out to help out the insurance companies, not the individual. Now, in this case here, we've got no-fault insurance, but when it comes to automobile accidents, if you're a party that is the one that is at fault, your insurance company will step in, or at least that's the first place for you to actually go to. And when they total a car here, what they're going to do is they're going to take that car. I forget the name of the shops. The shop that they take it to, but they're going to take it to a chop shop and get the most out of it. Now, I could have actually fixed my daughter's car. I've got a mechanic. I've got several mechanics that I trust that work on my automobiles, as well as body guys, just great folks. And I could have actually fixed her car for much less than what the adjuster actually came up with, but he didn't want to hear about it. It was easier for them to run this little computer report. They put in some information, and it spits out what they think is a comparable value. But let me tell you, that comparable value at best case, what I actually settled for was a 25% increase above that. I really wanted more. I just finally got tired after 3 weeks of duking it out with these guys. But what it took was going to really the head guy in Florida. So I was going to either go to after the head guy in Florida if I couldn't get what I wanted. It was then going to the actual president of Geico, or to Buffett himself and to his secretary, because it was a very frustrating experience. And I can imagine more frustrating perhaps for others, because I'll stay the course. I'm a scrappy guy. I'm a hockey player. That means when I expect that I'm going to get knocked down. I expect I'm going to get the what kicked out of me. But all that means I just have to pick myself up. So that doesn't mean just because I got beat up I'm going to go away. In fact, all it means is you just got to fight a little bit harder out there. But there's a lot of folks that won't do that. They will take, no, that's the way that it is. And, that's what the insurance companies play. That's the game that they play. So if you or anybody are ever out there, first, you can send me an email, and I'll tell you what I would recommend, because I can probably shortchange the time, because there are a couple of steps here along the way, because for me it was a learning experience that I would ask you to do otherwise. But, go to the top dog. But be prepared. I was so prepared, there was no way that they could dispute the information that I provided to them, and finally ended up by getting close enough. It was within about $500 of what it was that I wanted out there. So what a 3-week session that turned out to be. In any event, in the den here, our man Z asking me to take a look at the consumer staples sector. That is the XLP. Now, all the sectors inside the S&P 500, their summation indexes, turning down. They're still turning down everything except for the utilities sector, which is a real defensive play out here. Now, the consumer staples sector, also a defensive play, but moving up towards its highs. And the daily chart, the only bears here in this are on the trading session for April the 3rd out there. You had 11.9 million shares as the high was being made. That is a volume. That is a high volume high. You got to expect that to be tested out here. Today, you got 1.7 million shares already traded. Yesterday was 9.4, moving into 11.9. So I expect that what we'll see on the XLP is for that high to be tested, 40.27 out here. But it has been a rocket ship, no doubt. But underneath the covers inside the XLP, the summation index is saying there is something wrong in paradise. This stock's being paradise. Stay tuned for Basil Chapman, folks. Have a terrific Tuesday. I'll look forward to seeing you bright and early tomorrow morning. Take care, folks.